Hello and welcome to the Trading Zone. I am Joe Teague, portfolio manager at Equity Armor Investments, currently manager of the Rational Equity Armor Fund, Catalyst NASDAQ 100 Hedged Equity Fund, former VIX market maker, S&P 500 options market maker, here to talk about options, volatility, and the market and portfolio management like I do every week. Thank you all for tuning in and joining in. It's great to have you here. If you're showing up later, watching the replay, that's cool too. If you're here now, let me know. Say hi. I'd love to hear from you. I'd love to see where you're watching from and what you're curious about in the market. Super big week, you may know. I'm going to get into all that. So can't wait to see it all. Can't wait to hear about all of it. Brian's ducking today. I think every time the Bears lose, he seems to not want to do this show. But sorry to the Bears fans out there. Not their best week. But really exciting time for the markets. Let's just jump into it without wasting any time. We got my screen. Hold on. I have to cancel my screen share. This is not what we're trying to share here right now. We got if for those of you who are subscribed, let's see if my screen can work now. Yes, for those of you who are subscribed, we have the Ripple Effect newsletter. A lot of the show will be talking about this, but essentially big events coming out on Wednesday. Powell is going to be lowering interest rates to nobody's surprise, but there are some big events that we will find out a little bit more. How many more cuts are coming, and what is going to be the status of the quantitative tightening? Are we going to be just done with it? Are we going to go just like ease off it slowly? So I think that's going to be a really big story. Really will add to the liquidity, which of course has been driving this market higher. If you've been paying attention to our show, that is no surprise to you. This rally has been a liquidity-driven rally on top of a fantastic earnings rally. So that's where we're at today. Great earnings plus lots of liquidity equals high PEs. Let's take a look at the market under the surface here. Of course, we're looking in here at the VIX for the year. We've had several bumps in here. We had a big lull here in the summer months. That happens quite a lot. And then, of course, September, October hits. We get some volatility, big volatility in October. We had some trade news, which were really concerning to the market. And now here we are at the end of the month. Seemingly, we've come full circle. The trade news is in the rearview window. Everyone's thinking that a deal is coming with China. That could be great news for the stock market, of course, and there's no other shortage of catalysts as we move on here to the MOVE index, which is the volatility in the bonds. And as I've talked about on this show before, the lower this index goes historically, the higher the PE ratios go historically. So this is essentially a sign of liquidity in the marketplace. The more liquid the marketplace, the higher the PE ratios are in the marketplace. And this is phenomenal to see this volatility so low with uncertainty in currencies, uncertainty in Fed policy. It's amazing to see people are just that confident in these bonds, and no need for any volatility at all with it, which is just amazing to see. People are just expecting these rates to fall and no worry to the upside in rates or in yields on the government bonds. Of course, this is the skew index. Real quick explainer. So 25 delta put compared to the 25 delta call in the S&P 500 1 month out. I love looking at this as like a precursor to what the VIX is going to do. And it has not disappointed. Again, this is just collapsing, just like the VIX, of course, a little bit ahead of the VIX in this collapse. And we're close to relative lows here. So almost at the point where we should be looking at turning around and looking for some volatility again, because volatility is so cheap. I try to keep a level headed here. Hopefully you guys all agree with me. I don't know what the future is going to be. I just look at the facts. I just observe what's going on around them in the marketplace. And, last week I would have said, hey, volatility was a little bit high. Today, I have to take the counter view that volatility is a little bit low. It's just how it is. And here's how the VIX futures lined up last week. And here's here's how we're lining up right now. Just really flat last week. We were way higher here in this green line here. So just flat futures. Now, obviously, this could have gone two ways. You could have seen volatility continue higher. You get this inverted term structure. That's not what happened at all. We have much more normalized volatility here. Here we are in the red line. This looks like how it has been looking for some time here. This is going back to the summer months when we had really low volatility. This is what you expect to see in a low vol environment, and bulls in the market have to be loving this. Bottom line is, I'm going to talk about this in just a second here. We got, we don't have the government data, but we had the banks coming out to start the earnings season. They showed a robust economy. Deal making is still going on, especially AI or big deal making is still going on. So that's exciting for the market in the bulls. So earnings have been good to start. CPI actually last week was not hot. It was in line with expectations. So it was a great number for bulls again there. It just shows that the Fed can cut now again one more time in this year, and maybe even further down the road in January. So it's just a good sign for inflation that we're not running away here. So that's really exciting. But bottom line is, we got earnings after the Fed this week. We got huge earnings. Some of the biggest companies in the world are reporting earnings this week. That is going to be the story come Friday. Stick around to the end of the show. I will be trading one of these with a weekly options play, looking at their earnings and my expectations for them. So stick around to the end of the show, and you will see that trade. By the way, if you are a subscriber, you already have that trade in your inbox. So take a look out for that. Let's take a look real quick at the indices here. The S&P 500 all-time high, maybe a little teeny tiny kiss of the 50-day moving average on that trade deal shakeup, and just we're off to the races. The dip buyers came in. This was something I found extremely interesting. I've been watching this chart for a long time. This was the 2022 trend line into 2024. Kind of unwound and broke down. It really didn't make sense to watch it very much but it was very well defined here through 23. When it broke down here, kind of very worrying, but it seems kind of lofty to be all the way back up here at these levels. It seems like maybe this could be an area of resistance. We'll watch. Maybe it won't. Maybe it will. Maybe it won't. Maybe we can just go back up to the top of this green trend line. That would be fantastic too. So just something I'm watching closely. NASDAQ, no surprise there. All-time highs, rocking and rolling. The tech indices are just killing it. Specifically, the semiconductor index, the epicenter of the AI trade, just absolutely crushing it. You got Qualcomm today, new deal out there, going to be making some AI chips. Of course, Intel, another great week last week. We're up close to 40 in Intel. So just amazing to see this out of the semiconductors. Of course, NVIDIA, no slouch on its own part. Mag 7 for its part. Google is rocking and rolling. A lot of these Mag 7 names are just crushing it. We are getting all-time highs here. Just the leadership in this rally is right where you want it to be. This rally absolutely has legs. And this rally, of course, a lot of people will think of it as a bubble. And, there are some famous quotes about bubbles. If you see a bubble, you might want to just get into it while it's good. If it is a bubble, that could be good news for the next few years. If we are in the same cycle as 95 or 94, of course, is when the Fed first cut rates, or 95, the Fed first cut rates. 2024 is when the Fed first cut rates in this bull market. So if that trend is continuing, here is where we are in that spot. So of course, looking like potentially plenty more time for this rally to materialize. Now, the big thing that happened, of course, here comes in here, where we had a ton of new liquidity poured into the market, a couple of debt crises, a couple of currency crises, added to the global just liquidity bomb the market took in, which fueled the rally. Now, you might say that, hey, this current this current level of debt, the government spending, this current level coupled with the Fed lowering rates, maybe this is the liquidity bomb coming in right now. Maybe this is going to be pushed forward to here. We'll see how that plays out. Anything is possible. Open to all possibilities. That's just the nature of trading. Something will be different. That much I know to be true. Bitcoin, nothing to write home about here. It's not really showing a risk on or a risk off narrative. Very interesting to see. If you had been watching our show the past couple of weeks, you've been saying you've noticed us flipping sides on gold. We still love gold. Still want to own gold for the long term. Don't get me wrong about that. But for the past couple of weeks, we've been talking about how with all the narrative in AI being a bubble, people were saying, hey, I want to play it safe and jump into gold. I hope that wasn't the case. I hope people weren't selling stocks and buying gold up here at 4,300 an ounce. We're back below 4,000 today. So just a quick, sharp turnaround. I made the case that it's possible that gold is the bubble because gold doesn't earn anything, make anything, do anything. It's just kind of a defensive spot. And people were saying it's the risk off or it's a risk-free investment. That's absolutely not the case. Of course, there is a risk in buying gold. Just ask anybody who's bought in the past couple of weeks. So I made the case that was a little more risky than stocks for me at those levels. Now we get a pullback. Of course, I'm first of all, I'm still invested in gold. Just took some off the table last week. But if we get a pullback further, maybe my narrative will change. But bottom line is that was just a sign. People were saying, hey, don't buy stocks, buy gold because it's less risky. That just seemed wrong to me. And of course, if you were following the show, you saw that play out. Crude has been a very stable sign of inflation for me. Yes, we're up just a little bit in the past couple weeks here, just in the middle of October, but absolutely on the lower end of the range. This is just phenomenal news for the economy, for the stock market. This is just a tax cut. Everything's cheaper with oil being lower. This is going to keep inflation down. Now, maybe lower interest rates, economic activity will pick up, oil will go higher. We'll see how that plays out. But there's just so much innovations going on around the world, reducing our dependency on a lot of this, fossil fuels here, petroleum goods. So it's just we're just kind of in a stabilizing spot here for crude. Maybe we're just we're going to be closing that chapter as we go. And I just want to kind of turn the page here. We're going to get to our trade of the day in just a second, but just real quickly, with everything going on in the world with AI, everyone's kind of focused on the hyper scaling of AI, the build out of the data centers, these enormous machines that are going on. And everyone's questioning what is going to be the profit, what's going to be the end game there. Well, there are some really important things going on under the hood with that. And, there's really fast advancements happening in energy, of course. That's going to be a big component of that. And we're going to be able to need to power these data centers for what it's worth. And maybe once we turn these data centers on, then we can figure out how to power them more efficiently or cheaper. But we're going to be looking at small nuclear reactor sites. That's going to be a really big component to it. We're also looking at like the next generation of technology, like big advancements in things like fission. So there's a plant or a company that has a deal with Microsoft that is a fission power plant, if you can believe it, to power some of their data centers. So really big advancements happening in a lot of different areas. Then you go beyond that. You think about, biotech advancements, gene editing, companies like CRISPR that are just going to be able to do a lot of very fascinating things with all of this computational power. So that's super exciting. And of course, the machinifying of this smart technology, this AI machines, which we think of like Tesla and maybe even Amazon, hint, that might be coming later. And when it comes to robots, these smart moving machines, which can do functions that humans would otherwise do. And of course, finally, is going to be quantum computing. This AI is going to help us figure out how we need to put together this quantum computing, which you've already really started to see some advancements in, which is just absolutely phenomenal. Really, beyond my pay grade as to exactly what quantum computing is doing, but the power of the quantum computers are just unmistakable and undeniable to see how many computations they can do in a second. Here's a company which caught my eye because this CEO is going to be speaking at the NVIDIA symposium tomorrow. It's Inflection. So it's a SPAC. This is not even a public company yet. It's essentially is going to become Inflection is going to become this SPAC next year. So this stock is essentially trading like Inflection will be trading. This obviously doesn't have any revenue. It's all speculation as to what this quantum can be doing. Just look at this chart going, from essentially, a dormant shell company doubling, tripling in size very quickly to where we are now. And I think this CEO speaking could lift the entire quantum space tomorrow, but there's just too much noise for me in this quantum world. All these small quantum companies, I'll be perfectly honest with you, I don't have a physics degree. I don't understand exactly what they are all doing, but I can tell you there is a very big company out there that is doing quantum computing, that is currently leading in quantum computing, and that, of course, is Google. Google, one of my favorites companies. They are first mover in the quantum world. They are ahead of the quantum world. They are reducing errors. I think they are poised to be the winner in the quantum world. There's really no reason why they won't be, because their budget is just so much bigger than these smaller companies. And it's a very, very expensive game to get into the research and development. Now, this is a company I had a trade on at the start of October. I loved it. We ran through my call spread there. I put on a bonus trade last week because I just love it. And Google has just been running higher. So this is a trade we put on last week, selling January put spread. Of course, I think November and December is going to be good months for tech stocks. Buying this 260, 290 call spread, already making money on that trade. So might as well get into the next one I'm looking to make some money on. Is the trade of the week will be Amazon. Now, here is a company also very poised to take advantage of a very critical component of the next wave of AI. And I think that's the physical AI. And I don't, I kind of mean like, a robot. I kind of mean some functional, smart, moving device that's going to take the place of humans' jobs. Of course, Amazon has very large factories. They will be replacing a lot of their workers with that, but it's also cars. It's also drones. It's many different things which companies might want to buy from Amazon, not even for that they're making for themselves. So I just find this interesting that we have a stock market at all-time highs. Amazon is not at all-time highs. We also have a market maker move on this earnings of about 6%. So I'm thinking a good earnings will put this stock at all-time highs. So what I did was I bought the 225, 240 call spread, and I paid $5.75. That was my trade. I bought this spread. Hopefully this turns into $15. But bottom line is I have 2+% of risk on this name, and I get it to the upside. If it does have a bad earnings, of course, I'll be out my $5.75. That is a bummer. But if it has a great earnings, I fully expect it to meet that market makers expect to move to the upside. So I really like the risk reward on this trade. But let me know what you think. Let me know if you have any other thoughts on quantum or AI or semiconductors or anything else that we talked about in this video. Happy to hear it. Make sure to check out my Ripple Effect blog that is on our website. Make sure to subscribe to the trade alerts if you are interested in those. See my trades as I get them and throughout the week. And make sure to tune in again next week, same time, Monday at noon. Eat your lunch, and let's talk about the week ahead for options, volatility, portfolio management. Thanks again for tuning in. I'm Joe Teague of Equity Armor Investments.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.